This is Jeff Davis with the Davis Group coming to you with agent training number 20, working with lenders. In the real estate business, a lender will turn out to be one of your best friends because they make or break the deals for us in just about every transaction. Now, there will be times when you will have just, someone who's buying for cash, but that's going to be a minority, not the majority. Most times you're going to deal with people that need financing. And so you want to make sure that you have a good relationship with the lender so that things will move as they should. When I got into the real estate business years ago, many years ago now, I started off as a loan officer working for a mortgage company. Basically, I did that for about 4 years and worked for different companies. So I began to understand what it was to lend money. I found out what it meant to find buyers, to get them pre qualified, get them approved, work on problems. It was a great experience. And actually, during that time, I wasn't thinking about getting into real estate. But what made me decide to get into real estate is I was helping people buy property that they turned into rental property. And I found that, they had a good job, they were able to get a loan, and they were buying real estate. And here I was, spending all my time just making loans. So ultimately, I went to school, got my license, transitioned. Now, the experience that it taught me, and things have definitely changed through the years, but the things that it taught me is that in order for you to be successful in real estate, you really have to understand how financing works. Because this is going to be a key part to selling listings or working with buyers. Lenders need to become our friend, and that means loan officers. You need to learn when to take what type of buyer to what type of lender. Now, you can't tell buyers where to go. You always want to give buyers options. Sometimes when you're working with a buyer, they will already have a banker that they work with. I typically suggest they always go to their banker first so that they can see if they can get the best deal because they already have a relationship with them. But sometimes that doesn't work, and so they end up needing help. And there are a lot of ways, a lot of places they can go to get help. So let's take a look at some of those different aspects. The goal in having lenders on your side is you want to have people that you can ask financing questions to. You want to be aware of the various programs because there's always programs coming out that can help like first time buyers or help people to buy real estate. As a realtor, you want to pick a few lenders that you have a good personal relationship with so that when people come looking for financing, you can refer them to this lender. Now, this lender needs to know that they're working with you because the only way you both get paid is if the deal closes. So you're there to help them and they're there to help you. A word of caution. I'm going to caution you to not get too involved or too invested in your buyer's personal financial situation. That information is highly protected today. So you don't want to be finding out too much about your buyers. Like I never ask buyers how much money they make because the reality is I don't care. I don't ask them what their credit is because I'm not extending credit. I don't ask them how much money they have available to buy. See, those are financing questions, and if you're not the one making the loan, you really shouldn't be asking those questions. Now, do you need to know that they have a job or they've got the money to be approved? Yes. But the way you do that is you have them share that information with a loan officer who, number one, will keep it confidential and will be able to tell them what they can afford. So, you need people that have experience in conventional FHA and VA financing because those are the three types of financing people are going to use when they buy a house. Conventional financing is basically bank financing. It'll be anywhere between 5% to typically 20% down. It's going to have a set ratio of income to expenses that it's going to look for, and it's going to be a little rigid. So that's for people who have good credit, they've got some cash, and they can pass a bank inspection per se of their personal finances. FHA is a government-sponsored program where the down payment usually is lower. You can be in the 3.5% range, although if you want to put down more, you can. But the ratios are different and the criteria is different. So there are a lot of people that buy property using FHA. And then finally, there's VA financing, and this is for veterans only. And typically, if you're a vet, depending upon how long you've been in the service, you can qualify for no money down financing. You're still going to have competitive rates. You still have to qualify. You still got a ratio for your income and expenses, but no down payment. And so you'll have people doing that. You want a loan officer that is versed in those things and that can tell you about the different programs and look at different ways that people can be approved. Because that's really what you're going to the loan officer for. You want to make sure that your people can be approved in whatever program they're putting them in. Now, I haven't talked about this much, but there's also a different kind of bankers. You have people that work in a traditional bank. They're just a brick and mortar building or bank with checking, savings, a regular bank. They offer mortgages, many of them. But then you have people that work for mortgage bankers and mortgage brokers. Typically, the biggest difference between the two is that bankers will fund their deals. Brokers will be working with different lenders. So a mortgage broker is kind of like a real estate broker who's all over the place with different clients. They'll have different clients and stuff, but they also have a lot of options because they have many clients. So sometimes it's good to use a mortgage broker. Sometimes it's good to use a mortgage banker. Sometimes it's good to use a regular bank. You just want to have loan officers, regardless of which one they work for, who are familiar with the program so that they can offer something good to your clients. You want somebody that can pre-qualify and get your people pre-approved. Pre-qualify is when you basically talk to someone and based on their income and what they tell you, you tell them they have a good chance of being able to qualify for X amount of dollars in a loan. But when you're pre-approved, you have to prove all of it. You typically have to show your check stubs, maybe your tax returns. They're going to run your credit. They're going to come back and give you an approval that as long as nothing changes, you are pretty much going to get the loan that they say that you're approved for. So you want to work with loan officers that can offer pre-approvals. A pre-qualification is fine initially, but before you start showing houses, they got to be pre-approved. Because once you find the house that they want, you have to make an offer as quickly as possible, and you want to make sure that your buyer is ready to move at that time. And that requires a pre-approval. It's also good, though you don't have to have it a lot, but it's nice to know somebody that works in the commercial market. So every now and then, if you come across a commercial loan officer, keep them in your Rolodex. If you get like a 6-unit building that needs financing, you can refer them to that commercial loan officer. Commercial financing is much different than residential. Most of us are not going to do it, so I'm not trying to focus on that, but it is not the same because the down payment's different, the criteria is different, and what it's going to take to get them approved is different than it would be for a home. You want to stay abreast of the current interest rates. You got to pay attention to what's going on in the market. And there's no problem to be able to reach out to a loan officer and say, hey, what are your rates today? Many times they have rate sheets and they'll send it to you, or they'll just let you know where the rates are, because the rates are going to have a lot to do with how you sell houses. The higher the interest rates go, the more people that are priced out of the market. So it becomes harder to have buyers as the interest rates continue to climb. But when rates are falling, typically that's when more buyers come into the market, and that's good for us as realtors. And as I said before, and I'll say again, stay abreast of all the new programs. Anything that can help your buyer get into that house. You want to know what's going on. So again, as a realtor, you want to work with lenders. You got to get you some loan officers on your Rolodex. Put them in your phone. Have it where you develop a relationship with them. And when you come across buyers that need financing, have some options. Let them know, again, you should go to your bank and see what they offer. I'll give you the name of a loan officer I work with. You can see what they offer, and you can compare and see if you like it, or if you want to go to another place, that's fine. Whenever a buyer goes to some loan officer I don't know, I make sure that I reach out to that loan officer as well, because I want the pre-approval. And as a realtor, I think you have a right to expect it, because you should not be showing houses to people who you cannot sell the house to. Work with lenders.